The biggest challenge for 2026 will be government debt. Nick talks about government debt, probably as much as I'll let him. And then the second thing he talks about is our next slide. Go ahead. I wouldn't steal your joy.
Government debt's a big problem, and this is a pretty new problem. So on the chart on the right here, you can see federal debt held by the public as a percent of GDP from the year 1900 to today. So this is a pretty big time frame. You can see there was a big spike in government debt after or during World War II, and then federal debt levels came down, and then you can see that debt levels went up way before the pandemic. We were almost at wartime spending levels in the 2010s. It doesn't make any sense at all. And then we actually we exceeded, like when we were waging World War II and we were building 10,000 Liberator bombers and Jeeps and tanks. Somehow we had less debt on the books as a nation then than we do today. That's a bad thing. That's a bad thing. Where's that money going? It's not going to economically productive things. Just know that when the government borrows money, it creates massive upward pressure on inflation, and that puts massive upward pressure on interest rates, ultimately weakening the U.S. dollar, and it creates a lot of distortion effects in the U.S. economy. If the government reduces its spending, interest rates go down. So if the government passes a balanced budget, all of a sudden you would see all these interest rates come way down. So if you are upset that your mortgage rate is not higher, what you really need to do is write your congressman, write your senator, and say, please pass a balanced budget. I don't care what your political beliefs are. I think all people would agree that a balanced budget would be a good thing, and that's all we need to do.